If we get a rate cut and then a pause, I think we will see a lot of stress in the equity markets, because I think this idea that we're going to get a gradual and successive series of rate cuts has already been priced in. So I think that would be a bit bearish for the equity market. Depends, why we have a pause. If it's a re-acceleration in inflation, then I think, we will see much more negative price action in the equity markets.
In that context, what do you make of the volatility we've had? Because the market has taken fright. They had a growth scare. There are concerns around some technicals with the carry trade unwind. If we were not to get the playbook that some in the market had hoped for in this reduction cycle, what does it mean in terms of volatility and whether that could step up from here again?
Yeah, we have been telling investors to stop dreaming of the quiet life for some time now. The market has kind of rallied in our face, to be honest, but the events in August kind of proved that there's a lot of fragility out there, and we think that's going to persist. There's still geopolitical risk out there. Like you said, there's still a lot of extended positioning in some of the carry trades. And, if we don't get the narrative that the market's expecting, that fragility could come back and we could see things start to break.
In terms of the move yesterday, we did have some decent percentage swings, and we seem to have stepped away from very small moves now. So in terms of that volatility, it suggests that there's a lot of churn. Investors are deciding where they want to be positioned. Downside in technology again, the same area that has just gone back up again. So what do you think is happening in the backdrop here where there is so much change in the daily positions?
I think what we're seeing, which is probably welcome to a lot of market participants, is we're starting to see a bit more dispersion. So people are wondering whether this market rally is going to broaden, or is it just going to stay focused on US large cap tech? And is it going to move outside the US as well? Are we going to see other markets start to prosper, specifically Europe, emerging markets? Will the dollar start to weaken? That's really been the secular trend of the last few years, is a strengthening dollar, which has hurt everything outside the US. So the question is, are we going to see a broadening in the market rally? Are we going to start to see rotations? And we've had a few tentative attempts at both of those approaches, but nothing has really stuck.
Some would say that you actually are seeing a little bit of that rotation when you consider some of the blocks that have actually managed a record move then over the last couple of days, or at least hit record territory. When one takes a look at financials, up 16.5% year to date, healthcare 13.3% up to date, year to date, consumer staples as well 13.4%. All of those double digits and record territory for them. Is it just a case of you having that rotation come to play? But it's not a change in leadership, especially when you take a look at yesterday's market, which went down. Again, tech stocks leading that downturn.
Yeah, I think, what we saw first was that small caps started to rally. That was a few weeks ago. And that was really the sector that had been left behind. And then you mentioned the defensive consumer staples and healthcare. Those have started to rally. So you're right, we are seeing tentative signs of a rotation. But as you say, the leadership hasn't really gone from US large cap tech. And for that to happen, we either need to see much more dovish action from the Fed, so that people are convinced that it's time to really put risk on and move away from the US large cap tech, or we're going to have to see more negative earnings action from US large cap tech, which is clearly what the market is nervous about.